Good morning, welcome to Dukascopy TV and Commodities Corner. On today's programme we're focusing on gold as it's taken a bit of a battering since the end of 2011 where it dropped below 1200. Well, yesterday gold prices dropped within 5% of those 2011 lows, and Nick Calsey from the Gold and Silver Club of London joins me on the line now. Nick, an analyst recently said to me that commodities this year will be heavily hit by a rising dollar as a result of a more buoyant US economy. Will commodities suffer this year, and could we see gold drop once again below that 1200 mark?
I think, I definitely think we haven't hit the bottom in gold. I think that gold prices could still go lower this year. However, there are a number of factors that I think are supportive for gold prices moving forward. Now that tapering has been announced, that's out of the way, I think there's certain factors in play, such as the huge demand we're seeing from China at the moment. They're buying gold quite aggressively at the moment. They have the Chinese New Year coming up towards the end of the month, January the 31st, and gold demand does pick up. We've seen previous years as well. 2013 gold price was up 12% in 2012. Before that, gold gained 18% in the month of January. Also, if we look at the US markets, as you mentioned, if we look at the equities in particular, so S&P 500, Dow Jones, have recently hit record highs. I'm not too sure how long they could sustain these highs for. There's a lot of speculation that these markets are overbought right now and they are due a correction. If the US equities do fall, then obviously there's going to be a huge flood of money pouring back into gold prices. And if we look close to home at the Eurozone, there's a lot of instability right now in the Eurozone as well. So I think there's a number of factors that could be supportive for gold prices this year, but I agree that they still have a low to go this year before we see any rallies to the upside.
Do you think the mania for gold is ending, and ending badly? I know you're a fan of gold, Nick, but try and answer this as impartially as you can.
I think what we're seeing is in the West, the paper markets, there's been a lot of hedge funds, a lot of investment banks that have been pulling money out of the markets. We've seen a lot of money being withdrawn from ETFs, some of the big gold funds such as Paulson's fund. We've seen a lot of money being withdrawn from that. So that's what we're seeing in the West. However, the picture is really different in the East. There's a lot of appetite for gold in the East, particularly places like China and also in India, and it's a lot of it is driven by inflation. If you look at the West, inflation is at 10-year lows of about 1.2%. However, if you look at the East, so if you look at China, inflation is currently around 3.5%, and also India is close to 7.5%. So obviously that is very supportive for gold prices. So I think there's a bit of a divide. There's a lot of selling happening in the West, but there's a lot of buying taking place, especially on the physical side in the East.
Finally, let's get your projections in the short and long term for gold. What are you expecting towards the latter end of January and onwards?
So towards the end of the month, we have the FOMC meeting. This is going to be the first meeting of the year, and it'll also be Janet Yellen's first meeting as head of the Federal Reserve. Now, Yellen, she's a vocal dove, and she puts growth ahead of inflation. She's also going to be hugely responsible for determining the pace of asset purchases and also when quantitative easing will end. I think during this transition period, it's going to be very critical for the financial markets in a sensitive time. I don't think Janet Yellen will really want to rock the markets too much, and she'll play it safe and maintain her dovish stance, which I think will be very bullish for gold. Also, we have the Chinese New Year, which takes place from January the 31st. Now, during this period, China takes a week off, and the markets are traded very lightly. Due to low volume in the markets, we find that because China is not there to support the markets, we see big drops in the market. So looking at those two fundamental events, from more of a technical perspective, gold prices are still in a downtrend. They're still trading below the 50-day and 200-day moving average. If we can break back above the 50-day moving average, then I see gold prices could rally towards the 1300s in the short to mid-term. On the flip side, however, if gold breaks below 1150, which has been the key support level twice in 2010, and if we break below that, then prices could head to sub $1,000 an ounce.
Okay, thanks for joining me today on Commodities Corner. I'll be back tomorrow with the press review, but don't forget to check out all our other interviews and updates by clicking back to the homepage. Until tomorrow, it's goodbye from me. Goodbye.